Right. Okay, a little cut off there from the previous video. There's only so many limits uh, what the memory can take. But anyway, um, so prices and the actions running up against to create support and resistance also creates um, potential exit and entry points. So as prices reaches support and resistance, there's price rebound, bounces back, pivots, and it's the axis point. So that's absolutely key thing to recognise there in different timelines. So in a shorter timeline here, and comparing that to something maybe a little bit less as well. So you can go into the hourly and then find out here something, a trend within a trend, to find out what's happening there. So there's another good examples. Um, Price action may bounce back from support or resistance. Longs and shorts may be planned and entered in advance, anticipated. You know, the buying price can be set. Stop losses can be set to protect the equity which a person has. So of course, there's many other indicators and other information to detect whether these price movements are going to happen. How strong are those price movements going to be? When to take profits, when to call it a loss, where to set the stop losses, where to sell your price targets. Longs and shorts can be planned, entered, exited with reasonable effect and confidence. Um, you know, using due diligence in the pre-planning. So taking every care possible to recognise where the likely strong price action is going to be, where there's going to be weak price action, what influence is going to be there to affect the price action. Breakouts can occur. The take profit can be used, using indicators, patterns, measurements, pattern breakout measurements. So price action to create support and resistance, create patterns. Patterns have their own measured when they break out from a pattern, from that range bound movement, which is the pattern, breaks out, and there could be a measured move. And there's variety. That's another little science subject for itself. And a person with reasonable confidence can take profit. So entering trades here will needs risk management and including and not exclusive to the discipline of setting stop losses. Resistance can be a ceiling for upward price trajectory. That ceiling describes that upward price trajectory sort of runs out of momentum, out of steam. And then at that point, the market decides what it wants to do. Does it want to continue on? Does it want to retrace? Um, previous price action can determine the length of rallies. What is that rally? Where is the limit to that rally? What have we got here? Where's that limit there? Top of there, top of there, top of there, under there. So let's see that again. Previous price issue of those supports and resistances. So where's that come up to? Has it come up to a previous touch? What's happened there? Now this has been going on long enough. Is there a new pattern forming? Is that it? That looks pretty good, doesn't it? Okay, so we're still in this sort of descending wedge, right? bit of a descending wedge, range bound movements, moving out of that previous area of support. It's getting dangerous, isn't it? So let's put that into a 4 hourly. Distinctive wedge there, yeah? Distinctive wedge there. Breakout from that previous subline in there. A line, a trend within a trend within a trend. So it's come down to there. Is it going to squeeze back down into there and force itself back up? Because there's a confluence of supports and resistances in this area here. What's likely to occur? Let's have a look again. Previous price action. Can we expect it to come down to this line here, somewhere between the price of 37.4 and 37.7? Will it be? I suspect what will happen here. So we mentioned earlier in the previous vid about how support and resistance can create a squeeze, and where prices can become compressed, heavily compressed. Something's got to give. You can go up, outwards, a bit like squeezing a spot, and it can also go the other way as well. It might still try squeezing on through and maybe damage. But the descending wedge is another pattern which tells a different story. So that story is a bullish sentiment. Okay, and that's about knowing your patterns. Another science altogether. Patterns created by support and resistance, and various confluences here, creating compression, creating a squeeze. And in here, there's another section of compression here. Price is sort of compressed in here. It's not squeezing more narrowly now, is it? If that can trend upwards, it's regarded that there has been a bit of a price compression going on in here, this area of accumulation. It's wending its way out, isn't it? But this down here, definite compression going on there, creating that descending wedge pattern in there. And it's all about knowing, identifying those opportunities, trend within a trend within a trend, to be able to identify entry and exit points in a variety of different time frames, from very low time frames, minutes maybe, hours, days, and here in weeks, right? So yeah, that is the new support along there. What have we got besides that? Is there a even bigger time thing? It's a bit more difficult perhaps to identify support in this area, nice flat level. There's a variety of different ways to do that again as well. Along there. So probably want to put in a box, different ways to describe it. So if a person puts in a box, we know that's a key area of support, and it comes up against all those different areas of previous price history as well. Can bring it up to that lower point. If it falls through there, we know we've got to reassess and previous price action to find out where those previous areas of support and resistance are. There matches up quite well with there, doesn't it? So there, based on previous price history, very likely contender. And if that goes into, let's see, the weekly, what happens there? Where is this blue line? Where are those blue lines? We're on support here. So that blue line is also a matter of support. The moving averages are support lines, in a matter of fact. And it's on there at the moment, and we're looking for it to bounce up again. So when it does come touch down on that supply line, how far is it likely to bounce up? We can see what sort of percentages are there once it comes back off that line. That's a 43%er, maybe. Immediate action. Maybe from there, that little level and there. Within the week, that was about 17%, wasn't it? what can we expect there? So it touched down last week. Yeah, there was a significant amount of action, 8%. So, understanding that the moving average, that blue line, there's another level of support there as well. The technical support from the pattern, the previous price actions of 1, 2, 3 touches there. And they all inform how to make decisions. Where might it fall to? So, in previous times, you can look at where it lost support and what it took to get back above support again. I spent about, spent a 1, 2, 3 weeks batting to get back above there again, didn't it? What's happened previously? It sort of, battled it out, didn't it? Battled it out there. 3 or 4 weeks again, just holding above it, just one. Let's see that battered through there, but on that 55 there, 1, 2, 3 weeks, it's acting as a resistance, but also in a way a support. Support comes down, dips below and above again. Zoom out some more. What have we got here? Well, that's the MAs can be set up with different time frames to support. Look at that. Nice. Come down, cut losses, then up and away it went. Loss came back down, touched support. So what happens when things touch support on those EMAs, and when it reaches, if it falls below, reaches back above, how does the market behave? And you can look at that. A person can look at those in different time lines, and the inputs, different inputs of the days. You can do anything from for shorter time frames, maybe. It'd be a 9, 5, 10, 9, 15, 20 day EMA, for example. Maybe a 55 and 100 for a longer time frame. That red line there, 55 EMA, that's 100-day moving averages. And you can use 100, 90, 75, a 120, 150, and a 200-day maybe EMAs and MA settings. So that's the amount of days you need to add into those settings. There's lots of different ways to look at it, and taking that previous price history to identify different area in different time frames, support and resistance. Pretending from day trading to long-term trading and swing trading, identify these axis points. If it holds up, so it's here. If it does fall through here, it's not unlikely, is it? So we see previous price beats where it's come down, reached that EMA there, comes up to lose support. Yeah, and that is a market cycle. But here, what's happened here? 2015, a massive rise, wasn't it? Stayed way above that on that uptrend, really establishing a fantastic asset to create. So, let's have a look. Entering trades, it needs risk management. You put your stop losses in there, don't you? You need to understand that. Is another key word. Stop loss, mate. More times it touches support in these patterns, the stronger it is. I can't reiterate that enough. And it's not so strong now. I personally think that it's only 3 touches, 3 wicks. It's not a real solid establishment, is it? Even in the daily, that was a wick. So is that strong enough? The question is, but is that high? It just keeps dipping below, trying to hold support on there. It's really fighting above. It's not. It's just getting squeezed and compressed through there. You see, squeeze and compression. It's also slight trend through there. So there's some previous high identifies places to take profit, maybe in these intermediate or narrower time frames. Here, here, maybe all along there is a place where a person can enter a trade and take profit. And in a way, because it is the gold standard, it is the lead thing, it affects the rest of those in its market, the rest of those indices in its market. So, it's like keep an eye on this one, even if a person doesn't own any of it, because it's absolutely key to understanding movement elsewhere. So, knowing the support and resistance on something has an effect on the decisions elsewhere. Right. Um, so what we got, we can understand support and resistance is used to identify demand zones, supply zones, pivot points, where rebounds, entry and exit points, absolutely key. How to set up longs, how to set up shorts. It's more than just a price on the graph. It's where support is where the price is. It's not pushed down so much, or it's not pushed up so much. It's just range bound, creating a pattern. So support and resistance creates range bound movements, and that creates patterns. And that's another subject to get stuck into. Um, Levels of support can equate to buying opportunities where prices start to push higher again, and even within the big pattern there, say, there's also various sub patterns which have been identified over time. Yeah. And that is absolutely key, is being able to read the tea leaves there, mate. Um, and, if a person can read the tea leaves and see big pattern, intermediate pattern, a longer term pattern, an intermediate pattern, and a short term and a very short term pattern, there is profits to be made all along the way, whether the price is going up, whether the price is going down. What it does is take is discipline to be able to identify those and to be able to operate within those with a degree of certainty, not guesswork, with a degree of certainty, not hope or hopium, degrees of certainty and high conviction in order to execute entry and exits within a strategy, which is basically the fundamentals. Fundamental is with support and resistance. Is range bound. Is sitting in those ranges, and if a person can't identify those ranges, there's really no hope. And what they should do is to start looking elsewhere, looking at other things, other possibilities to put their investments. Because remember, this is high risk, very, very high risk stuff to do your own trades. There's lots of people who can offer financial advice about those things. There's places where a person, if they want to do it themselves, there's lower risk assets, mutual funds or ETFs, that sort of thing, indexes, invest in index. I mean, for fuck's sake, a person, if when you were born, if you got £3,000 in an index and just let it sit there for 60 years, you'd be able to retire very, 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 very comfortably at the age of 60. It's just worth a lot of money. Yeah. So there's other things to look at if a person can't make this work.